Stock market is a place where people buy and sell ownership in companies. Yes, ownership. When you buy a stock, you're not just buying a number on a screen, you're actually buying a small piece of a real business. Think of it like this. Instead of one person owning a company, thousands of people can own small parts of it. And this buying and selling happens every day in the stock market. Imagine putting 10,000 rupees somewhere and watching it slowly grow into 50,000 rupees over time. Sounds exciting, right? But then you hear things like stocks crashed, market fell, people lost money, and suddenly it feels scary. Is it gambling? Or is it one of the most powerful wealth-building tools? In this video, I'll break down the stock market in the simplest way possible. No jargon, no confusion. By the end, you'll understand how it works, how people make money, and how you can get started. Let's simplify it further. Imagine a company is like a pizza. If that pizza is divided into 10 slices, each slice represents a share. If you own one slice, you own a small part of the company. The more shares you own, the bigger your ownership. So when people say, "I bought shares," it simply means they bought a portion of a company. But why would a company sell its ownership? Simple. Money. Companies need funds to grow, expand, build new products, or enter new markets. Instead of taking loans, they raise money by selling shares to the public. This process is called an IPO. In return, investors get ownership and the company gets capital to grow. So why do people buy shares? One main reason: wealth creation. If the company grows, its value increases, and so does the price of its shares. That means your investment grows. Some companies also share profits with investors in the form of dividends, so you earn either through price growth, dividends, or both. Now comes the big question: why do stock prices go up and down? It all comes down to demand and supply. If more people want to buy a stock, its price goes up. If more people want to sell it, the price goes down. But what drives this demand? Things like company performance, news, economy, and even investor emotions. In India, stocks are bought and sold through stock exchanges like NSE and BSE. Think of these as organized marketplaces where all transactions happen safely and transparently. You don't go there physically. Everything happens online through apps and brokers. To invest in stocks, you need something called a Demat account. This is like a digital locker where your shares are stored electronically. Just like a bank account stores money, a Demat account stores your investments. Without it, you can't buy or hold stocks. You also need a broker. A broker is like a bridge between you and the stock market. Platforms like Zerodha, Grow, or Upstocks act as brokers. They allow you to buy and sell stocks easily through your phone. They charge a small fee for their service. There are mainly two types of people in the market: traders and investors. Traders try to make quick profits by buying and selling frequently. Investors, on the other hand, stay for the long term. They buy good companies and hold them for years. Historically, long-term investing has been more stable and rewarding. Let's be real. The stock market is not risk-free. Prices go up and down, sometimes sharply. But risk doesn't mean loss, it means uncertainty. The key is understanding what you're investing in and staying patient. The longer your time horizon, the lower your risk generally becomes. One of the most powerful concepts in investing is compounding. It means your money earns returns, and those returns start earning returns too. Over time, this creates exponential growth. That's why starting early, even with small amounts, can make a huge difference. Most beginners make a few common mistakes: following random tips, trying to get rich quickly, and panic selling when prices fall. The stock market rewards patience, not impulsiveness. Instead of chasing shortcuts, focus on learning and building a long-term mindset. To sum it up, the stock market is not gambling. It's a tool. A tool that, when used wisely, can help you build wealth over time. Start small, learn continuously, and stay patient. If you found this helpful, subscribe for more simple finance videos like this, and remember, the best time to start investing was yesterday. The next best time is today.